This is the Hey Ed YouTube channel, and I am your host, moderator, and all-around nice guy, Edward Anderson. And this is episode number 8 in a series that I call Trading Tricks. And in this episode, we're going to be talking about support and resistance. Okay, so when you're trading, there's really a few things that's at the core of everything else. And for us, that is the two terms you're going to hear the most often are support and resistance. Now, when you're looking at charts, you're basically looking for 3 different things that's going to help you identify support levels and resistance levels. So what are they? Well, think of it this way. A support level is the point at which a stock, now I use stock, but again, it applies to everything, right? Is the point at which a stock stops going down. So it goes down, it goes up again, puts in what I call a V, okay? And a resistance is a point at which a stock stops going up. So it goes up and comes down, forming what I call an A. And then you have channels. Now, channels are when a stock goes sideways, right? It goes up and down, up and down, up and down, and it touches the same resistance level and support level for a long period of time. It's called a channel. So those 3 things, support, resistance, and channels, are what going to help you identify the important levels of the stock or Forex or crypto, whatever it is you're trading. All right. So now over the course of time, you will develop an eye for these. Okay. You're going to be able to, at a glance, determine where the A's, B's, and channels are. All right. And you're also going to learn to determine which ones are sloppy A's and which ones are textbook A's. It'll just come with experience because they're not all created equal. For example, a channel where a stock goes sideways, it might go sideways in a sloppy manner, right? Where the A's and B's don't actually hit it exactly right. And you say to yourself, okay, yeah, it's a channel because it is going sideways. But then you have the textbook versions where they're right on the number, right? Boom, 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 boom. You're going to learn through experience which ones are the high quality versions of those A's and B's and channels, and which one are just okay ones. All right. Again, that will come with experience. So what the hell are you talking about, Anderson? Okay, so let's take a look at a few charts and let's see whether I can help you visualize what I'm talking about. Okay, and by the way, this is my YouTube channel, right? If you haven't subscribed, please subscribe. And when you do, if you click on the videos button, you can see the list of all the videos that I've done. And there's a lot of really good stuff here. And if you want to check out the playlist of just my trading tricks videos, all you have to do is click on the playlist button. And you see, I do already have it started there. Click on the playlist and you'll see, okay, so far I've got 3 of them in there, right? This will get popped. There'll be a lot more coming, trust me. But let's get to the charts. Here's an example of a chart. Now, we'll chart. I just brought this up because there's some pretty definitive A's and B's in there, right? So you can see here, all right, so the stock here goes up, comes down and forms an A. So this little line here, that's a resistance level, okay? And then put in another little A right there. And then you got a V, very sharp V down here, and then a rally creating a V. And this little a number there that creates a support level. By the way, look what it did. Right over here to the left, you see where the last support level was. So pretty close to that V there. It stopped and it stopped going down and it went up. So this little area over here provided what we call support. That's the point at which buyers started to come in. Then you see some more A's and B's and channels. All right. So the collection of these A's and B's will form patterns along the way, but that's what essentially you're looking for. You're looking for A's, B's, and channel. And after a while, you're going to learn how to look through the noise. Like this guy here, yeah, I did put an A there, but it's kind of a sloppy one. But then this one up here is very definitive, as is this one, as is this one. Okay. All right, let's take a look at another example. All right, so this is from a video that I did a little while ago. Where I predicted a market sell-off, and I was way ahead of everyone. And all I did was look at the chart. This is the chart of the market. I forget when this was. I think it's back in February or something. And what I did, I drew a line here at the previous support level created by that V, and I was telling people, okay, if this level is taken out, watch what happens. Now, I was also factoring in the smaller A's. See how these A's, each A was shallower than the previous A, that's an indication. And we'll get into that more in my other videos. Okay, but that's why I predicted this, and I was right. I just do simple things like this, which you're going to learn how to do, that anyone can do with just a little bit of knowledge, which I'm going to teach you here. So what we're looking here, we're looking for support levels and resistance levels. Here's another example. Okay, and here I was talking again about the market. This is back in April, and this is what I was predicting. Well, so I drew a line there along these little peaks there that were resistance. The reason why I kind of ignored these guys because I wanted to go back. We had a head and shoulder pattern forming there, so I wanted to look through this, and this was the important resistance level, and this was the important support level. And what I was telling my audience was, watch this level, watch that 32,600 level, because if that's taken out, that next support is 26.1. And guess what? I was right. All right, let's take a look at another sample. All right, now here's a chart that I did for one of my videos on Bitcoin. And I was telling people way back then where the next major support level is. But all I had to do is take out this little support level here. That was the next support. After that, here was another level of support. And again, what did I do? I used this V, which lined up with that V, which was an important one. This was an important support level. And I was telling people, if this is taken out, the next support is way down here. And here's another little example that I made along the way. Is I was talking about Bitcoin, and I showed the range. And I just what I do? I just drew a line along the peaks here, right, and a line along the two V's here over the course of time. And that's why I called this critical support, telling people that if this is taken out, we have hell to pay. Okay, now a few things you need to know. These charts and these patterns, the patterns work in all time frames, all right? Whether you're a day trader, what we call a swing trader, or a position trader, or an investor. Even hedge fund managers should be using this. I don't know why everyone doesn't look at the charts. You'd be surprised how many people rely on fundamentals. Fundamentals, remember, do not matter. The only thing that matters are the charts. Learn how to read the chart. But if you're a day trader, you would look at the 1 minute and 5 minute chart, right, to determine what's going to happen during the course of a day. If you're going to be swing trading or position trading, we're taking a longer term view, you would look at the 1 day chart, maybe even the weekly chart. So there are a few determinations you have to make when looking at the chart. One of them being, what's your intention? Your intention is to just trade intraday during the course of the day, or are you looking to do stuff with your 401k or your IRA account, right, where you have to take a longer term view, in which case you look at the longer term chart, right? So you want to make sure you're looking at the appropriate time frame of the chart to find chart patterns. Okay. And another point I want to make is when you start learning chart patterns, you will learn that there are different examples. You will learn that there are different levels of quality of patterns. For example, one of the patterns that I'm going to show you in one of the videos is called the Anderson pattern. And there is a textbook version where it goes up sharply, pulls back, it goes in a nice long channel. And then there are sloppy versions of that, where maybe that sideways move isn't very well definitive, but you still might want to do it. Okay, so a lot of judgment does come in along the way as you trade. And a lot of it comes down to your experience. Remember the time on the water, the time being in there, and you're just going to learn as you go. But my primary message that I want to get across in this little snippet video is the importance of support levels and resistance levels. Okay, support levels and resistance levels is really the core of everything you're going to be doing in trading, and then you'll make your decisions accordingly. So if you need to, watch this video several times again. And now I'm keeping this simple because these are very short videos, right? I'm just giving you the broad brush strokes of things you need to start thinking about, things you need to start learning if you're going to be a trader. All right. Remember to give this video a like. And if you haven't subscribed, please subscribe. And if you need to binge watch all of my other trading tricks videos, make sure you just watch the playlist. Click on the playlist button for the trading tricks, and you can watch all of my trading tricks videos in one sitting. So please give me a like. So I'll see you in the next video. Edward Anderson signing out.
Copy that.